Hello everybody, welcome to another monthly edition of Ask the Trader. Thanks for tuning in. If you're watching live or watching the recording, like I said, this is our monthly get together where you can ask me anything about trading that you like. First up, some announcements. You might already know that we're moving from the Telegram Traders Club group to Facebook at the end of this week, and you're going to need a link to join in, and qualification for that is via IGOX. You've got to have a setup with IGOX copy trading service to be able to get the link. If you're in it, send me that send me an email request to info@TheStopHunter.co.uk, and then I'll get you that link out, probably coming out tomorrow to go live for Friday. So that's the big announcement here. And like I said, this session is all about you. I've got nothing really to add. I'm just going to try and answer your questions, and I have some pre-sent in ones, and hopefully then after that we'll go live and we can take some other questions from the floor. So let's start off with some questions. We've got a couple from Garth to start off. First one, read them off my screen here. Hedging, yes or no, and any other details you feel are relevant. Garth, up to you whether you want to do hedging. Hedging is a way of mitigating your risk if you've got something wrong. I do put the opposite positions in play in, say, CFD trading, but that's because I'm using different time cycles. So it might look that I'm hedging off the position, but I'm actually trading different cycles within a longer term point of view. Maybe, for example, I might think the S&P is going up in the long term, but in the short term we have these pullbacks that are worth playing as well. So that's probably the closest you can get to hedging. I would test it and make it part of your strategy. Know the numbers properly first before doing it. Other methods, are using futures and options. Again, down to very complex subject options. I think I've got some videos on the channel there about that sort of thing, how you can take out some of the risk. Options are a great way of doing that, but for a general standard, say, CFD account, then it's putting the opposite position on, and then same sort of size, and that will, one will counteract the other, and you'll get nowhere. You'll be locking in that loss maybe, and then up to you what you do with that next. So it's a bit more than just a question for here. It's a topic and a plan that you have to build into your strategy if you're going to do it. Then the second question from Garth, we got mixing Renko and Heikin-Ashi in strategies, good idea. Not against that. It's totally a good idea if you've tested it and you think it might work. You could, for example, use Renko as a trend filter and trade around maybe the Heikin-Ashi charts. Totally up to you, but the combination is totally fine if that's what you want to do. Questions from Garth. Then we got one from Logs. Similar sort of question, actually. Combining Kagi and Heikin-Ashi. If so, is there a very simple strategy you could suggest? Well, exactly the same as I just said there for Garth's second question. Maybe you could use Kagi as the trend filter because it makes it more obvious, and then use Heikin-Ashi as your trade entry, exit, management tool. That's probably the simplest one that you could put together. Then we've got a question from Crypto8Z. Have you used or familiar with the EA that can be used for MT5 position trader market keys? Now, Crypto8Z posted that into the Telegram group. No, I'm not familiar with those, and personally don't use them or don't need to use them because I otherwise automate my own stuff. So no, not familiar with that lot. So really can't pass any further information on there. Moving on to further questions, we got 4 from Daryl. It says, I found your video on historical volatility and your calculator. Maybe it would be nice to go over it again so others could see it. Only thing is the calculator is like a paid-for service. If you like to, maybe you could explain how to set up stop loss using Renko on the 1 hour time frame. Right, so let's switch to the charts and do an example of this. So let's bring up the charts. So in front of you, you've got it's a stock actually I've been trading today, Boston Scientific. On the left hand side, you've got the candlestick chart. On the right, let's just actually switch that to the hour because that's what Daryl wanted. Hour chart for Boston Scientific. We've got a block size of 45 cents on there. And what's the process? Well, the first process is first of all historical volatility. Now I've got this put on the daily chart here down the bottom on the left, and we can see a recent spike in the volatility. Got a long-term moving average on there. It's about 19% at the moment, but if you look back a bit of history, it's probably more around the 28-30%. Now I've got a spreadsheet that then you plug those numbers into. You would take the annual volatility, and what we want to try and do is create a daily volatility, and we can do that by dividing that annual number by the square root of 260, so 260 trading days, and that will give you a daily percentage move of how much that market is likely, to move plus minus in any given day. Now, if I plugged in 30% and let's just round that price up to 54. No, it's 54.5. Let's use 54.5. Now you can't see my calculator at the moment, but it's a very simple Excel spreadsheet that is easy to do. Like I said, I think it's in there on the video how it's built. I haven't seen that video for a long time, but what a basic comeback is with that Boston Scientific on any given day at the moment at that volatility level, and I've used 30%, is about 1.86% move in the price plus minus. Now that's okay for you. Then I factor in things like holding period of the trade. How long do I expect to hold this sort of trade? Other factors around the instrument. It's a stock, so it can be prone to more spikes. So I'm factoring in some random variables there. So for me, I would probably, thinking, well, I could be holding this for say 5 to 10 days. I want to give it enough volatility move. So I probably times this, that 1 day move, that 1.86% by about 3, just for example. So that gives us a plus minus 5.58% move for that whole trade. So what would that mean if we then head back up to the Renko chart? Well, that would give us a stop loss round about, if you took 5.58% of the current price. Let's just draw that on with the chart. I think that would be about 51 at 0.46. So that yellow line there. So the stop loss would come in somewhere there. Now, if you actually look at the chart, you can see we've got that turning point there. What you can do further then is refine it against other variables, like say you might have Fibonacci in there. We could draw that on. Let's just pull that back some. You can see a low to the high. Let's go there. So you might start at this point here, but you might take it up if you've been a bit more aggressive to that 61.8% Fibonacci line, which you might think's more important, round about there. You want to be super aggressive, maybe even there. But volatility is what I use for my stops, and it's telling you to be somewhere around that sort of early $50 mark if you were putting on that trade. So that's a simple volatility example. Let's now flick back to the questions. Let's have another look what we've got going on. Another question from Daryl. When using the 50 and 200 moving average on 1 hour time frame on Renko, are those moving averages still considered as 1 hour look back, or could I consider them daily? No, neither of those. What it's saying is it's 50 to 200 Renko blocks. Okay, so 50 to 200 blocks. It's not to do with time. It's looking back 50 blocks to produce that moving average. Next question, is it a bad idea to place orders before the stock market opens? Should I wait for the market to open first each day before taking trade? Depends on your strategy, but normally yes, it's not the greatest idea, because overnight there's pre-market, and especially stocks around earnings season, that can jump massively and you can be sitting on a big loss. And remember also, probably the first 15 minutes, half an hour, most of the trading of the day is done as well. So sometimes it's best to just wait and see what happens, when the dust settles, or what your strategy, is telling you. It's probably easy to come in at market rather than leave the orders there. And finally there, what is your opinion of Nvidia? Is it too late to get in? Has the price gone too high? Could there be a possible big sell-off? Well, personally, I think Nvidia's still got some to go. It seems to be a very popular stock. A lot of momentum behind it at the moment. It's just about 498, I think, at the moment, where there is some big options activity which expires on Friday, so I expect it to hang around there for the next few days, sort of price wise. Then I saw some more options at 510, so I think it's still got upside. There's no reason why it can't go up. I think if it does have a big sell-off, it'll be due to more fundamental problems with the tech sector and the economy as a whole. But Nvidia is great for AI, so many different sectors that it can be involved in. So it's a really strong stock at the moment. So yeah, I'm still reasonably bullish. I've been trading it today to the upside. So yeah, why not, Daryl? I think it's still a good one for possible upside moves. Right. So that was your questions that you sent in to me prior. Let's just have a quick go through the comments to see if there's any further questions. Sorry for the stopping. CR. Hi, great to be here. Have you used or familiar with a trade position manager here that can be used with MT5 because it can assist with position size engine? Not familiar with that one, CR. I have sometimes bought long dated put options on the Qs and SPY just to protect my account. That's going back to the hedging question that we had earlier. So CR's using options to sort of mitigate control risk around his positions that he's taken. Right, anything else there? Crypto A to Z. From Daryl's question, what would be the advantages, disadvantages using the 1 minute time frame and 1 hour time frame together side by side? Also, if the 1 minute and 1 hour, would the brick sizes be the same? Well, the disadvantage is that the 1 hour will be delayed by a whole load of minutes. You're going to have a lot of temporary blocks until that 1 hour finishes. But like I said, I try to get people to think about it, is because a charting package like TradingView has introduced time into Renko, which isn't really strictly what Renko is all about. It's almost becoming like a Renko version of a candlestick chart. So if you were trading candlesticks, forget Renko for the minute. Is your strategy to trade it on the close, or is it to trade it as it actually is live for that hour? So in that hour, anything can happen to the candlestick chart. It can completely reverse against you, as can the Renko, and those Renko blocks will just disappear and you won't see them printed on the chart. Whereas your strategy might be to wait for that hour to complete. And if you're longer term, holding on to an hour is not such a bad thing. I've got strategies that run in the longer time frames. They make the trends more obvious. Running together, I like probably to use the longer term as the trend filter, the 1 minute to update regularly, because I trade quite often. Would the block sizes be the same? Again, that's up to to you what you want to do. You can do the same block sizes because you're basically saying the 1 minute chart is getting you in quicker, maybe on the way of the 1 hour trend. But if you've got different sizes, it might be a sub strategy in on the longer term trend, maybe. Many different ways of analyzing that, but shouldn't be that much of a problem. What else have we got here? Would you advise in using NinjaTrader, and have you used it before, specifically for indicators which are not available on TradingView? I've never used NinjaTrader. I've seen it, but don't really know how it works. So yeah, I can't really say much about that. So I'd just give it a go, give it a try, see what it's about. Right, Rahul, which indicator is best suited to work with 1 second Renko charts, especially on indices? Well, turning it to 1 second is about as close as you can get before turning it to tick data. And if you watch the videos in the Renko playlist on the channel, you can use all those indicators, you know, stochastics, Bollinger Bands, Donchians, Darvas, all work perfectly fine in the 1 second. It's getting the block size that will be important there. All must get that block size right. But then, you know, the indicators that you'll find that I've put out in the videos all work very nicely. Anything else that we can see in there question wise? Just quickly scan through. See our Amazon back to 140. That's an interesting one. Let's have a look. I'm just going to have a look at Amazon. Let's have a quick look at what Amazon doing. Back to 104. So we're at the moment 134. Yeah, I wouldn't argue with that. Crypto A to Z. Let's just put it into. Oh, sorry, RCR. Let's do that into the Renko chart on the 1 hour. Yeah, block size looks about right, $1. It's looking nice. It's got a double bottom in there. We've actually got that W shape playing out, at least up to 138, 140. Yeah, won't argue with that one. Yeah, Amazon back to 140. I think I might be long it anyway. Right, got some comments there from CR. NinjaTrader, great for executing chart package. I haven't used it, but research the platform. It can be expensive for data. Thanks, CR, for that tip there. Jeff Rice says Trade Manager, InvestSoft, not bad. I don't know anything about that myself. Jeff looks like he's had some experience with that. That looks like the questions. Anything else out there? While you're thinking about that, just a reminder again that the Telegram group is moving to Facebook, and qualification for entry is that you are a member of IGOX, the copy trading service. It's all on my website, or you can drop a note into the Telegram group, or check the videos on how to join IGOX in the YouTube channel playlist. Basically, minimum entry is £100 investment. So, in terms of charges, costs, that's a $2 entry fee into the Facebook group, basically, if you're not in it already. So it's hardly much, less than a cup of Starbucks best coffee there as well. And like I said, that will be going live on Friday. So get on in there, new month coming up as well, so a great time to join in on that. Han says, can I trade live the Dow 30? Good question, but I don't really trade the Dow much. I'm more NASDAQ 100 and S&P 500, sometimes the Russell 2000. Live trading is a bit hard because it's when the signals turn up. So you might be watching me doing nothing for a long period of time. I know roughly when it gets busy, but it might be one of the most boring videos I've ever produced, and some of it is automated as well. I'd have to plug in the DAO to the system. It gives you similar results to some of those other US stock markets for me, so it's not one of my favorites. Thought about doing live trading sessions, but like I say, it's very hard to actually make it an interesting subject. And I don't know, maybe I need a time lapse thing to speed up between the gaps and the differences to make it interesting to when the action happens. So Hans, I'll have a think about that one and see if I can get something to work. CR says Ninja Trader great for futures. That's the last comments we've had coming in. He also says, yeah, actually good for execution charting package. What else? Have we got anything else from anybody before I go home and have my evening dinner? This is your chance to ask questions. By the way, this session won't stop. All the other live streams that I produce in the week, I've started doing live streams sort of early, or late morning come early afternoon for markets like the S&P, oil, some various stocks. Any other suggestions? I'm quite happy to do some other live stream analysis research for the site. So none of those will disappear when I move to the Facebook group. You know, like I say, Ask the Trader will still be here for everybody. So yeah, can't see any other questions coming in at the moment. So speak now or forever hold your peace. Yeah, well, I think that we'll call that a day. Next up, I suppose, in live stream world from my side is the monthly review of iGoX performance. That will likely be next Wednesday. I'll put out the obvious, you know, links and that when it's appropriate. Then again next week, some live streams, the oil, the S&P 500, some stocks to watch probably. I think I might also do one on my Renko hot picks for the week ahead as well. That could be an interesting one. Maybe in FX World might put some out there for you guys to get your teeth into. But other than that, I think we should call that an evening. Thanks for joining in and watching. And like I said, I hope to see you again soon on one of the other videos. Thanks again. Good night.